I want to do a quick stock market update here before the open bell tomorrow. I did hold the cold and also the yang, right? The two positions that I want to keep into this thing because I picked up the cold on these this down move, right? Because the thing is, you usually have what's called three black crows, 1, 2, 3, and then you have a bounce. But see, they took it down this morning, right? But it's okay. We're in a good position to get out of this thing either way because you have a high day close, which means most likely it's going to visit that area anyway. It came off the low, and I rode that up from the bottom to the top here. Okay, that was a nice move. You're right in that bottom. So I put that trade in. So what was that? Well, whatever that number was, right? So we get position. Now, what's really interesting, the volume is still heavy on this. See this volume? Compared to historically, I have to take that off for somebody who can't do it at the same time. Historically, the volume is still high. So someone would say, well, that's a distribution, but see, for every distributor is actually accumulator. So what that's going to mean is there's going to be a lot of natural gas. This is short, going to be right in this line here. Now, this not a good ETF to use for this because 3 times and there's decay and all sort of stuff. So I'll try to bring up UNG in a minute. But see, that's going to be a lot. So what I mean is this probably be a pivoting point going up and down for maybe months right in this area, right? Because we got to see a lot of activity in here, okay? But anyway, so tomorrow, let's see. So we got, like I said, we got this gap. Look at that gap. Isn't that beautiful? We got this gap that, so let me watch this thing tomorrow. I'm going to try to see if that gap gets filled right in there. And I can't tell what that price is. Bottom of that stick candle there. Let's see, whatever that is. Let's see, what is that? It is, bottom is 1579. So 1580 on the top side. We're 1520, so we're getting close there. So, and by the way, I'm going to take these positions off. I'm going to repeat everything, the KLD and the Yang, no matter what, by tomorrow, even after hours if I need to, or in the morning, whatever, because do not hold into the Fed announcement on Wednesday. So tomorrow's Tuesday. I'm guarantee you, do not do that, because even if you're right, you're going to get a whipsaw, and it ain't worth the risk. It is not worth the risk. So I always tell people, if even the day traders, you wait till that storm, the dust settles, because you have no idea how they're going to spin it or try to move that thing, right? So that's one day. There's a couple of days that I will not have a position in, and that's one of them, Fed days. I will not, because you don't know how they're going to spin either way. Okay, so overall, things look pretty good. The only thing is we got here, so we got that gap, still here to fill, which is good for the KLD position. This is high risk trade, by the way. I usually don't like trades. Now, one concern is we got the MACD starting to roll over. See that purple? It's going to try to punch that now. So what's going to happen is, so if they can try to turn it sideways, and it'll play over here a little bit. But if it punches through, we're going to see some fall through on this thing too, right? And let's see. So let's look back here. And yeah, like I told you, I like that. See, usually I was hoping for a cup and handle, usually, but that it's kind of did a high stretch on the cup. But look how it went straight down. Remember, when you want the handle kind of like drag out here more like this, but it's coming straight down, okay? But that's okay, all right? Oh, and before I forget, you remember I told you on Friday that a key statistic that people don't pay attention to is that if you have a black or red, which means a down day on the markets, I'm not talking about this ETF, but the entire markets, Russell 2000, Dow, S&P 500, if you have a black Friday and a black Monday, it means you're in a nightmare. Coming within that week time frame, you're going to see some major sell-off. I told you it's a very rare thing, and major sell-offs there. Guess what they did? They pulled everything green, didn't they? All right? They pulled everything green, so that means we can forget about the mass panic sell. So we're probably going to see some, I told you, they may be trying to position for the Santa rally. That's why I said get out of your positions before the Fed day, right? And get out of there, okay? So you're going to see this, probably what's going to happen is you're going to see some whipsawing. It could go up and down really hard, up and down this, and then they try to probably bring in the Santa Claus rally as the volume drops off, right? As the volume drops off, they're going to try to raise this thing up, okay? But like I said, that just blew that away, because I thought, well, maybe they'll do another massive down move. Remember, because I told them they're trying to alleviate and give some room to bring up the Santa rally. And, they're kind of just taking this thing up and down sideways. But anyway, that thing is home for a major down. Now, it still could be in play, but the thing is, it doesn't look like it, because the way I said, we should have had a black Friday and a black Monday, and then I would have said, oh my goodness, it's coming. It's going to be either Tuesday or Wednesday, Thursday, or Friday. There is going to be a major sell-off, okay? So that is a thing in there that I pay attention to. This thing is still floating way below. Let's see what some of those moving averages hitting. The 100-day is floating around there. That's interesting. That's a long stretch. 200 is way above, so that's okay. And then the 20, see 20 is the red. We're gonna do this over the 50, the green, 20 or the 50. Now this, where's the 20? 20 or the 50? 50 is green, so they're about to cross. They used to call that the cross of a red through the 50 a death cross, and I believe it's 2050. I can't remember. I don't pay attention to this. Yeah, see, there was like, I don't know, is it 20 to 50? I'll have to look that up. What we call a death cross. It's a major, or is it 200? Yeah, it's 200 something, right? Never mind. Let's not pay attention. We're doing short-term trading here, anyway. All right, so I'm going to keep moving here. So let's bring up UND real quick. See UND or UNG. UNG is the natural gas. That's the long position of it. And let's see, full screen. Let's go this. So look, because that was the short. Now that's the thing I told you, that massive M pattern. God, look how obvious that is. Oops, I just scattered out. Oh, what happened? Jeez, scattered over here. Shot everything over. That's just weird about this Yahoo. I don't know what's going on here. What? Yeah. So wait, UNG. Oh yeah, it's just got the opposite there. No M pattern there. Now see, this is where you could argue maybe they're trying to do cup and handle. You know, you got to be fair on both sides, right? You know, maybe, you know, you could do this and it goes up here and then they slowly cock it back and shoot it up, right? On the natural gas. So we're going to pay attention. Remember, we just read the charts. We don't try to, you know, second guess it or we watch the damn news. Just going to just do what we do. So we got to pay attention. If it drops down like that real sharp, then we know that there's going to be some follow through, right? If so, we're going to be looking for that handle move. That's pretty good. 1, 2, 3, 4. That's already a heavy move, like you saw on the upside. That's why I took the opposite on the KLD, because that's a big move. See, if you look historically, even you find 4 moves like here. You had, you know, there's a 1, and there's 4, and it kind of went sideways. So, you know, this was 1, 2, 3, 4, about 5, and then it's kind of, you know, it's kind of sideways. So that's actually dangerous where it built up some flaps. And here's another one. 1, 2, 3, 4, 5. So it can happen, right? See the others? Yeah, because see, you can get some moves where it starts to move in one direction. Look at that. I don't have one. Oh, boy, that would have been a nightmare if you're short. Look at that. Eef. That was actually a short. That was a crazy situation. Okay. All right. So anyway, so let's see here. But that was such a steep move. That's such a climb, quick, right? You gotta have a pause because none of those moves are that sharp and steep. You do this steeper. It's like there. You need a big sharp. That comes back down. You need a steep sharp like that. I mean, seriously, it's too steep right now, right? So it favors being short on the short side. And then also, look, we got the gap, of course. We just talked about that on the KLD. I mean, KLD, we got the gap. See here. So, you know, bounce here. So that would actually help, you know, forming that if you want to go alongside natural gas, thing like that. All right. So that's that play. Oh, and the MACD's crossing. So that, then you got to pay attention. So here's natural gas. You know, if that crosses that, then we can say, you know, you'll be playing here, and by the time that crosses, we might see a move up. So, but you know, it could be someone here, it moves that before it crosses that MACD over. Might be here, it might be down here, but see, but we got to be watching somewhere that pick up and start moving up. Okay, looks like it's about 3 days out from moving over the MACD crossover. Okay, let's see what else we got. Sorry, I am fighting a cold, by the way, friends. No, it's not. You know what? If I even mention that, I'll get banned. Even can't even say what you know what I'm talking about. The bubonic plague. You know, I mean, if you talk about that, which I don't, but if you mention that, that's just picked up something like my throat and everything because it's been wet here. And okay, so anyway, very humid and rainy all day today. All right, see. Oh, so let's do the VIX. Oh, that's what I want to show you. The VIX is very, you know, I'm trying to keep these fast, but not too fast, or people get lost and what's going on. I mean, if you like them, I don't even know if you do. If you guys don't like them, just tell me to quit doing these, because I don't know if anybody really enjoys these or not, right? So here's the VIX. Oh my gosh. Here's your fear gauge. Jeez. We were looking for this thing to do really well on the VIX, because remember, the higher it goes, it means more fear. The lower it goes, it's the more greed. We had the W pattern. Remember, we talked about that. So now it's already completed, the W pattern, in a sense. See how we got this W pattern completed right there, right? So we got the W pattern complete. But see, the problem we have is this gap. That's what concerns me now. That means the market's going to probably do some kind of jam somewhere down the road. You know, they're going to jam this thing to fill that gap and push push the greed versus the fear. Okay, so we got to really watch it. You know, the thing is, this was actually rare today, because what happened today was we had a big run up on the VIX. I mean, it moved up like, gosh, I mean, it was like 9%, something ridiculous. While the markets, it moved up at the same time the markets moved. Now, usually they're supposed to be inverse of each other, okay? And that's concerning, because when you have like the S&P 500 moving when the fear gauge is moving, I mean, fear is moving at the same time, that means they're loading the contracts. Now, usually what they're trying to do is they're trying to hedge their position for that fear. So then that's what they're positioning for before the Fed day on Wednesday. It tells me there's a lot of ifs and ands and buts that nobody knows. Everybody's really confused, because so what they do is they'll hedge it by taking the VIX and going long in the market. And that's what we saw today. We saw a bunch of hedging. You know, I don't know. Well, I don't. So I can add, I want to show that real quick and see if I add a comparison to, let's say, the SPY. Let's go ahead and see what happens here. The SPY, that's the SP 500, okay? Now, I can't understand this. We had this weird junk with this. It's hard to tell, right? I really can't even make sense of this dang thing. See, I'm trying to figure out what, I should have done this one. I should have done something else, because it says S&P 500 is the green line and the VIX is the blue line. Is that true? No, because that's our moving average. You gotta be kidding. You see this right here? Let's change the color of that one to something weird. Not weird, but let's do a bright pink. Okay. See the bright pink. Does that change the thing? Oh, well, it says 3.4%. I don't see the dang line, though. God, see, this is a terrible way of comparing. Well, I can't do that right now, because now this thing is terrible. Usually what you'll have is it'll show you both lines. See that right there? It'll show you both lines that you can actually see one the other. Well, anyway, so what you would have was, so normally you'd have one going up and the other one going down. So they're going, you know, opposite. So anyway, I'll have to look that up. But anyway, just make note that you should not both move at the same time. So that's a really funky situation, because now we know that they've hedged their rear ends off for this thing. And so it's, yeah. So you can read that how it's, you know, that's all you can say is they've hedged their bets. That means that there is a lot of confusion going this, meaning that, boy, it's probably not going to sell to the following day. Whatever move it's going to make, it could be wiped out the next day. That's what's going to tell you. I'm not kidding you. What I just said, it's the move. And it's not that the rate. Everybody's pretty much baked in the 0.5, but what hasn't been baked in is the words coming out of their mouths, right? So, or the reaction of the market. So, all right, so that's that. That's a oh, one more thing to take that comparison off. Let's see, how do I get rid of this? Let's get rid of this SPY here, okay? Now, what do I tell you, though? Remember I told you, though, that we'd come up to the 25 range. Remember I told you that a good spot would be anything below this would be the market. Remember I said that between 20 and 25 would be key right here. So now we're in, like, this is it hit that 25 exactly today. So the reason I bring that up is now it's getting riskier to be a bear. It is. The risk is on now, because, you know, we were over here, we were halfway, now we're up there, and now the risk is on. So you got to be really careful, being a bear in here, because if I show you historically, then yes, you can go up to 35, whatever, but I'm telling you, you're in that marker range right here, this 25, where, you know, if you look historically, you are going to, let's pull this back, you know, and here's the thing, you're going to be sitting right here, midway, right? Or somewhere in here. So you got to really be careful, because either side, actually, well, I would say actually the advantage is leaning towards the long. It's just a little bit right now, right? Just a little bit, because you're in that 25 range, and we saw those moves and everything like that, and you get the Santa Claus rally this season, all this other garbage, right? So you got to be really cautious as a bear, keep your stops in, blah, 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 you know, all that stuff, right? And on the pause, let's see what we got here, looking at the candlesticks and stuff. Yeah, like I said, we got this darn gap. That's a dang dangerous thing now, because that's got to come to a whipsaw thing before it goes up again, possibly. All right, so let's go look at the China, which was nice because the market's up, but China still took a beating, which is good, right? Because they've overinflated that sucker. Let's see, that was the, well, I haven't traded this thing much. Okay, what is, oh, the Yang, I'm sorry, Yang, boy. Yang, okay, so look at the Yang. There's actually a better symbol for tracking it versus the yin, because the yin is the triple, by the way, all this other stuff. And I found a better tracker. I can't remember. It's in a... Okay, well, let's see what happened here. We got it smack in the 10-day moving average, kind of. Let's see. Boy, I can't understand why I can't get that to look better for us, to get bigger so we can see what we're doing here. Right? You need to be careful with the store. You know, the store thinks so bad you can't tell what's going on. Okay. This is what I like about the yin, it's reverse of the China market. Is that, like you said, we got that crossover starting here. The volume's about, it's kind of trailed off a little on the upside, which is kind of disappointing because you want to, but they're still stepping into it. But if it trailed off like that bar right there, then you gotta be really concerned. So it's floating, and there's still some buyers saying, hey, we're stepping in this trade now, right? And so that's a good sign. The only thing is, like I said, the rest of the markets, they take off. China could move with it because, everything's international anymore, right? And so here, I'm trying to bring this out. What I still love this trade, though, because look at this. I mean, look, we just filled one gap, okay? That was one gap that was filled. And now, see, here's the problem. This is going to be nasty. This is going to be brutal. Let's try and trade, because now you got another gap, too, that took this morning between, see that gap there? You know what I mean? So are we going to fill that before we launch again, or are we going to go up here and fill these other gaps? I mean, we're going to come up here and fill that gap. Oops, sorry. God, that's terrible. We're going to fill this gap on that one. Between there, between these, sorry, that's not very good. Between those bars, or we're going to fill this one, right? And there's one way up there, I mean, there's a ton on this to the upside, which means as long as you don't have too much gay, you could probably sit on this one and you'll clear it out eventually somewhere. It'll probably come up here. How long, right? You gotta be careful with the, the season, and you don't want to be holding it for 2 or 3 months with the decay factor, because decay, remember, this thing starts drifting down every day just by the decay. That just happily and naturally, right? That's what happens. That's the only thing that's bad about these ETF. They have decay. So, that's the thing is, that's, like I said, no matter what, tomorrow I'm taking this off, take it. I got in here last Friday, so I can't remember the number price. Somewhere in here last Friday. Here's Monday. So I'll probably take that off. Somewhere here. Oh, sorry about that, brother. Anyway, so I will call him back. Sorry, my folks. So anyway, so this is what we got. All right. So I'm going to wrap that up, and that should be it. All right. Take care. I'm trying to let me see if there's something else. Yin Yang, VIX. Let's see. That's the most important ones. Yeah. Yeah, and also you can look at gold and silver to make sure it's following these. The oil. Oil was up today, which is good because that lets us put pressure on natural gas when oil pulls back. It'll be a double whammy. All right. God bless. Take care.